All right. Good morning, trade pros. Welcome to our morning market update for Tuesday, actually, September 4th, 2018. This is George Papazov. Today, I can't show you the camera because I don't look good, right? That's the real reason. No, the truth is, I left the camera at home and I'm stuck in Chicago. I was supposed to be home already today and presenting out of our live room with the team, Victorio and Mark. If you guys are back there in Toronto, hello. You guys are holding the fort down today. Don't put any holes in the wall. Not too big anyway, so we could patch them up. um, so yeah, I'm stuck in Chicago today. There was quite a bit of a thunderstorm and lightning last night, and a lot of planes were grounded and flights canceled. So I'm up in a hotel here. I'm at the Hilton, connected to the terminal. So I literally just take the elevator down and walk to the flight, which is about an hour and a half after a trading room ends. So it's really good. I get that opportunity to be here with you today. I am on the road, so I'm on my laptop setup. I did a little video about it yesterday to the group and the team on YouTube to show you guys what the setup looks like. So exciting stuff. Let's get into the morning market update. Again, I'm sorry there's no camera, but we'll be back to that tomorrow. We got a few things to talk about today. Number one, we're going to talk about the tropical storm coming in and how that's affecting the crude oil prices, and Brexit and this NAFTA deal and how that affects the currency market. All right, that's what we're going to cover. I will tell you this, today as a Tuesday, volume is already back in the market. I'm just going to move this little terminal here. We have got on the S&P 500, we've already traded 330,000 contracts. So like we were saying the last couple weeks, volatility is slow, and don't expect to get big winners. The markets are slow, blah, blah, blah. All that's over. Institutional traders are back this week. Volume is going to be back, and we're going to get a tremendous amount of opportunity over the next couple months. So this is kind of prime time for every trader. So hopefully you've sharpened your skill set and you're ready to rock, because this is it, guys. We're back into the high volatility period. All right, in today's markets, Asia, Japan's down 0.1%. Hong Kong's up 0.9%. China's up 1.1%. India down 0.4%. So mixed markets across the board, with the most amount of momentum coming from the mainland in China. In Europe at midday, London's down 0.3%. Paris is down 1.1%. And Frankfurt's down 0.9%. So European markets sell off a lot more heavily than the Asian markets. And moving into the U.S. session, futures in the morning, the Dow's down 0.1%, and that's intensified a little bit more. S&P's also down 0.1%, 0.2 now of a percent, and Nasdaq down 0.3%. So we're seeing a sell-off early on here in the equity market. We've had a really good bullish run over the last couple weeks. And I'll tell you this right now, this week is the test of that bull. And I think on this week's price action, we're going to start heading lower to reverse some of these gains and to hit some of the sell stops, the downsides that have accumulated from a lot of buyers getting long over the last couple weeks. We've been long on low volatility and volume. And now that the volume and volatility is back, this is a true test. Will institutional traders be buying up here, or are they going to get a chance to sell some of this with some of these new fears coming in the market that we're going to talk about? So it's a key week. It's a testing week here for the market. September and October tend to be bearish momentum months. September is one of the worst months of the equity market history. In fact, if you go back 30 years and take every September and average it out, that's the only negative red month for the S&P 500 in a 30-year seasonal chart. Just so you know. So what the type of month that we're starting here, and that's why I'm spending a little bit more time on this, tends to be a bearish skewed month, which means equities go down in this month, gold is up, volatility trades higher. And I would tell you that if you're an options trader looking to sell volatility, this is one month you want to avoid. Because selling volatility while it's increasing is a sure way to get yourself spanked. All right, often and regularly. So if you're into that, go for it. Now, can this year be different? Absolutely. Just because a 30-year seasonal chart tells you it's a negative month doesn't mean that this year's September has to be negative. We could squeeze out gains and end up positive. That's why it's a 30-year chart. But know and understand that a lot of the smart money, the traders that have been in this market for a long time that are successful, are starting to look for some reversal here in equities. That's what I'm going to tell you. So in today's market, we're going to look to start selling rallies, and we're already through the open of, or through the close of yesterday's trade. Yesterday markets were closed, but futures did trade on Friday's price action. The close was around 09, 29.05.75 on the S&P 500 futures. So 5.75 Anywhere in there is going to be strong resistance, but today around the 0.2 half will be the first resistance level as we rally up to test that. All right, crude oil prices up 2%, now trading over $71. We'll talk about why in just one moment. Actually 71.11 right now at the height. I think we reached all the way to the 30. 23 was the height of it. All right, gold price is down 0.5%. Gold's getting hit down to 1,200, and in fact, now below the 1,200 level. Bitcoin's up 0.6%. On today's economic calendar, 9:45, you have PMI manufacturing index data and ISM manufacturing index at the top of the hour at 10 a.m. and then construction spending as well. So we have some manufacturing numbers coming out that could have some influence on the market. Not going to be market movers, but you definitely should watch out at 9:45 and 10 a.m. All right, so why is crude oil up so much this morning? A few reasons, and one of them is going to catch you off guard, and it's a simple answer to why. It could summarize them all. First, let's go through the more straightforward ones. Storm Gordon, it's a tropical storm, is ripping through the southern tip of Florida at the moment with high winds and a lot of rain, a lot of downpour. It's expected to make landfall tonight. All right, and it's expected to reach a hurricane level along the central U.S. Gulf Coast, and that storm, the surge could reach up to 5 feet of water. So this is kind of what's giving markets a little bit of concern and uncertainty. And as you guys know, the Gulf Coast is where a lot of oil trading, exploration, storage goes down, and some refineries and storage platforms have shut down. All right, and that's kind of what's pushing the oil price higher. It's on the reduction of supply, on the supply side. All right, as much as 8 inches of rain expected from Gordon across Mississippi, Alabama, and Louisiana. So anyone out there listening to our broadcast, I'm sending you guys positive vibes, and I hope this thing breaks up and doesn't reach as a hurricane, because those areas have been hit before, about a year ago. If you guys remember, there were a few hurricanes that happened very close back to back. So I hope you guys are safe in those states. My positive vibes go out to you, and I'm hoping for the best. And stay safe, guys. Honestly, that's your top priority. Wish I could do something for you. Hey, maybe I could. I don't know. Maybe you guys want to come to Chicago, get on my plane. I'll give you my ticket. Crude oil prices rise sharply today. They're up about 2%, as we said. Again, Hurricane Gordon. But in addition to that, In addition to that, ExxonMobil warned of a supply crunch in Nigeria. As well, we're seeing some ship tracking data coming in with the reduction of Iranian exports. So now Iran's able to sell their oil less because there's less consumers willing to buy from them, because in November, new sanctions are set to hit, where the United States and Donald Trump says if anyone's purchasing Iran's oil, we're going to take action against that. What could they do? They could shut down the banking system to some of these countries, and shut down the banking system for Iran so they can't trade in US dollars. They can do a lot. And so a lot of countries and companies are taking action early, and we're seeing a drop off in Iranian supply, which means what? Less supply from a hurricane, less supply from a threat of Iranian sanctions on their oil. That's both supply side hits, and we're getting into a season where we're going to start getting colder, so crude oil is going to start to go up as well for the demand side. Actually, that's not always true. Natural gas demand goes up significantly more through these cold season months. All right. What else? Venezuela and Libya, there's uncertainty out of there as well. So anyways, the point is there's a lot of bearish news on the supply front, which gives bullish momentum to crude oil prices. Do not fade this thing. All right. Look for sell-offs and low risk, high probability opportunities to get into crude oil. So I'm looking to sell rallies on the SPOs, buy dips on the oil contracts, and looking for higher volatility. And that's, I think, how we start this month off. Now, if this thing rips 10 handles on the S&P 500, then stop. Don't look for selling rallies. You're going to know if it's really strong if you follow the right information. If you're looking at the right information, correlations and raw price data will tell you way ahead of time, before we even rallied, that this market is not weak. All right. Today, ask yourself this question. All right. If I was already long, would I add more to my position before buying? Because that will psychologically keep you on the right side of the trend. Last thing I want to talk about on oil. The reason that we're up above 71 is this one simple reason. Not one person that I researched from expected oil to break the 70 even resistance. All right? Not one person, which means what? People are shorting that 70 even level. If they're not thinking it's going to break above 70 and they're not shorting the 70 level, then they're doing what? They're selling their long positions at the 70 to take profit. So at the very least, traders not expecting oil to break above 70 start reducing their positions on the long side by taking profit, selling out of them near the 70 level. New shorts come in because it can't break 70 and they're not expecting it to. Now shorts are accumulating. A short seller has a buy stop above, which means you're adding liquidity to the upside. Long trader who's deleveraged their position has gotten out. It goes above 70. Shorts get squeezed. Longs that got out are buying back in saying, darn, this thing could keep going. And they feel like they missed. So, all right. So the FOMO traders chasing higher with the shorts getting squeezed out took oil up to that level. In short, why is oil trading at 71 when 70 was supposed to be a big resistance? Because everybody believed 70 was supposed to be a big resistance. And so it wasn't. That's all I'm going to tell you. That's how these markets work. Brexit negotiations are kind of starting to sour. The deadline for a Brexit here is in March, and there is no negotiations in place that are favorable to get us to that with a hard Brexit, which means we're going to a soft Brexit, which is not what the people voted for. That means potential leadership change in Theresa May's government and parliament there in the UK, and a lot of uncertainty about what's going to happen. The pound's getting hammered. Is it getting hammered? Hold on. Let me pull it up because I didn't actually look at it this morning. I'm on the road. I'm a little discombobulated the first little bit. Yeah, it's down. I wouldn't say getting hammered, but it's down. Right? Not as much as I would have expected it to, actually. However, it is down. Donald Trump on Sunday, we're going to finish this, tweeted, there is no political necessity to keep Canada in the new NAFTA deal. He's right. If we don't make a fair deal for the U.S. after decades of abuse, Canada will be out. I didn't know I was that abusive. Thank you, Trump. Congress should not interfere with these negotiations, or I will simply terminate NAFTA entirely and we'll be far better off. That's probably a negotiation tactic from Donald Trump. I do think a Canadian, Mexico, U.S. trilateral agreement is much stronger than a bilateral. However, that's how he negotiates. He makes these statements and then gives them negotiation power. We did not reach a NAFTA deal last week, so eyes are on the charts and the dollar. It's called the loonie in Canada. The loonie. All right, look for weakness in the Canadian dollar, and I think this weakness will continue. If there is a surprise NAFTA agreement, the Canadian dollar is going to rip because there's a lot of sellers now in that market. Don't buy the Canadian dollar yet. It's not time to do it now. Look to short it, buy the US dollar versus the shorting the CAD. So long US CAD pair. All right, that's what I got for you guys. I know you looked at a screen that didn't really move much, but I wanted to give you guys an update and have you look at a visual rather than nothing because my camera was not available. Thank you all for tuning in on YouTube. I have to say goodbye. I got to go in and open the trading room. I appreciate you all. I'll be back to the office tomorrow. Chicago, I'm going to miss you. It was a fun time. Thanks for having me. Anyone here listening in from Chicago, you guys got a great city. It's reminiscent to me of Toronto, actually. The configuration, the setup, the feel of it, very similar. All right. See you guys later. Have a great day. Enjoy the first day, the first trading day of the month. There's going to be some high volatility. Take care. Have a great day, and I'll see you all tomorrow. Thanks for tuning in. Goodbye. It's back to work. Hope you enjoyed your long weekend. Time to make money. Ciao.